Hey Puppy Trades! I want to do a video analysis update of the stock market. We're going to talk about the S&P 500 ETF SPY a lot in this video. We're also going to talk about the airline stocks in JETS, as well as American Airlines, Boeing, and JetBlue to show how the industrial side of this market might not be done, and it's going to take a fifth wave higher. We'll talk about the price of crude oil as well. We're also going to talk about Walmart, Procter Gamble, and Nike to make the case that some of these consumer stocks are going to take the lead in the coming rotation in the market. We'll also talk about Polar Power and FSLR to show how the solar energy stocks, the clean energy stocks, are also going to be future leaders in the market. Okay, but first, I want to make it very clear to anyone who's new to this channel that I am completely aware. I am completely, I would say more aware than anybody that 95 to 90% of all of the gurus and all of the people on FinTwit are just people who will call the top every single time the market makes a new high and say it's about to crash. Okay, it's about to crash, right? That's the top. Buy my subscription service, and I'll show you how to navigate it. Okay, what you have to understand is I'm simply not one of those people. Okay, I'm not perfect, but I'm not one of those people. Okay, I came out on October 31st. And I said that SPY completed a wave one from the March 2020 low to the September 2020 high, and that it put in a wave two low in the September 21 low. From there, it made another wave one and another wave two. So I came out on the last day of October, right before the election. I said SPY is about to blow up, right? SPY is about to blow up. Minimum target, if you take the length of wave one, place of the wave two low, is 460. That's going to be hit sometime in the middle of 2021. Okay? That happened. SPY blew up, right? SPY's exploded. So what you have to understand is, from the perspective of my subscribers, my followers and me, we've been full bull laughing at the bears for the past 100 points in SPY. Okay? And that is just a fact. We have not even considered the bearish scenario except for one time when it did happen. Okay? And I'll prove that right now. On December 26th, I said I wouldn't even worry about, the bull scenario until we reach 392, because that's the next minimum target. Okay, I said that on December 26th. Then we reached 392. This was the first time, the only time since September and October I've said anything slightly bearish. I said if we get a dip, it's going to be in the low 380s. It was actually in the low 370s. My bad. But then we were going to explode higher for waves 3, 4, and 5 anyway, right? So I said I was long the market with cash to buy dips. And then if we got this dip, it was going to be very profitable. We were going to blow up to 407 and beyond, right? And that's exactly what happened. That is exactly what happened, right? So we got that dip. And then I came out, I said exactly what I said was going to happen, that we were going to explode higher for waves 3, 4, and 5. 406, 410 was the next stop, right? And then we'd have a shallow correction and have a fifth wave higher to a local top around 422. Okay, that was on March 8th, right? So what you have to understand is from October 31st to, basically now, right? We've been making memes about the bears. We've been making memes. We've literally been making memes. I came out on January 4th. I said if a bear calls the top below 400, that's a bullish indicator, right? Because bears fuel the rally higher. I said on January 16th, bears, you're about to look like clowns, right? You're about to look like clowns, right? I'm calling the bears clowns for months, right? Because we have minimum targets in Elliott wave theory that we get from the impulse structures. And what you have to understand is from, since January 5th, I've had this scenario where SPY goes to 410, 420, right? And then, everyone gets super bullish, and then we have a pullback before we blow up this summer. Okay, so we're going to talk about that wave count. And we're going to talk a little bit about, what I'm seeing in the market right now. So first, let's look at this wave count. This is wave 1, wave 2, wave 3, wave 4, and now we are within wave 5, right? That's the wave count that's gotten us this far. So let's look at SPY on the biggest picture, right? Let's look on, the largest degree count of SPY. Okay, what I'm seeing is that this is a very clear wave 1 that we form in the dot-com bubble, right? This is the dot-com bubble. And then during the entire 2000s, we have an ABC correction, right? And wave C culminates with the housing market crash, right? The 2008 housing collapse puts in a very large degree wave 2 for SPY. Okay, this is what I'm seeing in the market. You can recreate this on Boeing. You can recreate this on American Airlines. You can recreate this on Chevron. You can recreate this on JetBlue. What I'm about to say. Okay, what I'm about to say is that from that March 2008 low, we go on a huge rally, right? A huge rally to the February 2020 high, right? Before the March sell-off, we go on this huge rally. And there's a debate in the community, the wave community, is this a wave 3 and this is a wave 4? Or is this a wave 1 and this is a wave 2? Okay, the evidence, if we look at the airline stocks, if we look at Chevron, is that this isn't a wave 3. This is another wave 1, right? This is another wave 1, right? Oh my, right? I'm saying there's not a wave 3 on this chart. If you think that rally, during the 2010 decade was big, it's nothing, right? That was just wave 1. The sell-off that we had last year put in a wave 2 low in March, right? So if you're looking at this as the Elliott wave theorist, you're saying, whoa, Puppy Trades is extremely bullish. He's saying that whole rally in the 2010s was a wave 1. And I am, right? That was a wave 1. If we clone that tool on the biggest picture, the minimum wave 3 target takes SPY to 480, 490. Okay? 490. Next minimum target on the bigger picture. Okay? So in Elliott wave theory, there's a few ways to classify the waves. Okay? The larger degree is the more important degree. And the impulsive waves are the only ones that you actually trade. You anticipate impulsive waves because they have minimum targets. You prepare for corrective waves to buy and ride the trend higher. Okay, you don't actually trade corrective waves. A lot of people don't understand that. That's why wave theory, doesn't work for them. Okay, they go, look at some other form of technical analysis, but they always come back, right? Because wave theory is the best. I can assure you of that. We go from this March low. Then what happens? We have a wave 1. And then we have another wave 2 that we put in September of 2020. So this is what it looks like on the slightly smaller degree, a wave 1 and a wave 2 that we put in September, right? And that's exactly, what's played out so far, right? So just looking at this, if we clone the wave 1 and we place it at the wave 2 low, then this is extremely bullish. Right? What I'm saying right now is if we take the length of wave 1 and we place it at the wave 2 low, the minimum target is 460, right? 460 is the equal legs target. And that's where we get this 460 summer target. Okay? I am expecting that SPY will hit 460 this summer. Certainly. Okay? I shouldn't say certainly, but this is very impulsive that we're going to go on this wave 3 higher to 460. Okay, and that's the minimum target because wave 3 is actually bigger than wave 1. It's followed by a shallow wave 4 correction and then a 5th wave higher. So if you're just looking at this right now, you're saying, okay, Puppy Trades is, he's still very bullish the stock market. So, why am I, maybe talking about having a little bit of cash ready to buy a dip in the future? Well, if we look at this count, this is exactly what's played out. Wave 1, wave 2, wave 1, wave 2. Right? So we have wave 1, we have wave 2, and then we have wave 3 that is put in sometime between February and March. Okay, so this is what I've got right now. One of these highs is a wave 3. Let's say for the more bullish scenario, this high would be a wave 3. And this low is a wave 4. Well, either way, I'm looking for a 5th wave to end this cycle from the March, low in September. Okay? So what I'm looking for right now is that at a certain point, we talked about the NASDAQ a lot for a 5th wave. We've talked about, NVIDIA, Facebook, and Apple in my last video about navigating their 5th wave higher. What I'm seeing right now is that SPY is going to, complete a wave 3 at some point, have a wave 4 correction, and then it's going to be, at the tail end of this rally from the low that occurs in September of 2020. All right, so this is what I've got right now. This is a wave 1, a wave 2, a wave 3, and a wave 4 from the September rally. Okay, so we are within wave 5 from the 920.21 low. Okay, so what's that going to do? I'm going to delete these numbers, for just a second. I don't want to confuse anybody, have too many degrees on the screen at once. Okay, but this is kind of what I'm looking for in the stock market right now. We talked about QQQ in the fifth wave a lot. All right, we're going to talk about SPY right now. I think at some point, SPY is going to complete this fifth wave higher. Okay, there's a lot of evidence the market's going to take a fifth wave higher. And what's that going to do? In my opinion, that's going to complete another big wave 1 from the September 2020 low, right? What I'm expecting in the stock market is going to be something like this. Once we complete this wave 1 high, we're going to have a wave 2 correction. That's going to be a huge buying opportunity, okay? It's going to be a huge buying opportunity. How deep this correction goes is going to be in direct proportion to how much higher the fifth wave extends, okay? So that's why I'm not looking to short the market, because this fifth wave can continue extending, okay? You don't trade corrective waves in Elliott wave theory. You only trade the impulsive waves. You prepare for the corrective waves by having cash to buy a dip. So what would I be looking for in the market? I think it's going to look something like this. Let's say the wave 5 high is 430, right? Let's say, we have a wave 5 high, wave 5 of wave 5 ends at 430. What I'd then be looking for is to buy a wave 2, in this box, right? I wouldn't short it. I definitely wouldn't short the stock market. And then what I'd be saying is that this is a massive nest, right? So if you're looking at this right now, this is extremely bullish, right? I'm saying this is a wave 1, this is a wave 2, this is a wave 1, and this is a wave 2. Okay, so towards even the end of this year, towards even the end of this summer, I have an extremely bullish outlook on the stock market. But I don't think we're going to get there in a straight line. I think we're going to have another bear trap, right? I think we need more bears to go higher, and that fits in with this cycle. Okay, what's another cycle that it fits in? I think this is very interesting. Okay, so this is the seasonality for the past 20 years of the S&P 500. Okay, and it has played out pretty perfectly with what we've seen in 2021, and it is really agreeing, to be completely frank, with what I am seeing in the stock market right now, where we have a high in February, a low in March, and then we have an extremely bullish April that we're going through right now. And then in May and June, it gets a little red, okay? So this is what I'm expecting. This May and June, kind of troublesome seasonality for SPY is really reflecting, what I'm seeing in the market right now. And so, yes, there's going to be, setups in the next, 4 to 6 to 8 weeks that if you can honor a stop will be very profitable. There's no doubt about that. But I think if you zoom out on the larger degree and you take into the account that my followers and my subscribers have been fully bullish, since 322, 327, you kind of have to ask yourself, am I picking up quarters in front of a bus? Okay? So let's say if the high was at 430, sometime between mid-May and late June, just in time for this seasonality, I'm looking for this blow-off top phase to end and us to have this wave 2 correction, which would be a huge buying opportunity. A huge buying opportunity, okay? Right now, my best time frame to give for when this exactly will occur is going to be from the QQQ chart, okay? This is the chart that I have the best read on. I think the NASDAQ would outperform SPY regardless. But this is what I see right now in the stock market. If we look at QQQ, it's going on a wave 1 and a wave 2 correction that it has in the March 5th low. So this is what I'm looking for right now in the stock market to kind of time this very final thrust higher. We have a wave 1 for QQQ. We have a wave 2 correction in March of 2021. We have a wave 3 higher, and then we have a wave 4 correction, and now QQQ is going on a 5th wave higher. So I think this is really going to play out, that QQQ is bouncing from this box impulsively, and if 324, 328, but 324 would be the invalidation, then QQQ is going to be our best read, for timing this blow off top, where we're going to go to 354, in the end of April, early May, QQQ is going to go on this thrust higher, and then just in time for this seasonality, we're going to have this sell in May, sell in June moment before we explode higher. Okay, that's what I'm seeing in the stock market right now. I'll give it to you guys straight. I'm not ever going to come out and say, hey, this is the exact top, buy puts. Why? Because we're going against the impulse if we do that, right? The impulsive waves are clearly bullish. We are going to see 460 this summer. I think we're going to see 480, 500 towards the end of this year. But we have to have cash, a little bit of cash, ready to buy that dip and take advantage of some of that fear that we're going to need in the market before we thrust higher. Okay, let's talk about some other sectors in the market. This is the airline ETF, JETS, JETS. I really like this setup right now on JETS, where it has a wave 1 from the May 2020 low, has a textbook wave 2 correction, and then it goes on a wave 3 higher. The wave 3 is actually what's textbook, because you see it goes exactly to the 161.8% extension of wave 1. Okay, so that's exactly what I want to see. This wave 3 goes to the 161.8% extension of wave 1, and now it's having the textbook shallow wave 4 correction. So this is a very cut and dry setup right now. For wave 4, you have a box between the 38.2 and 23.6% retracement of wave 3. Okay, in this box right here is where JETS is currently appearing to bounce from. Okay, so the wave 5 target is the length of wave 1 placed at the wave 4 low. I think right now, as long as JETS is above 22.10, or just above 22, I should say, because that's the high of wave 1, that's also the 50% retracement of wave 3. And a wave 4 in Elliott wave theory should not go past the 50% retracement of wave 3. So we have a very clear invalidation level. We want JETS to hold above 22, and if it does, it's ready for a textbook wave 5. Okay, so if we take the length of wave 1, we place it at the wave 4 low, I expect in the next 6 to 8 weeks, we're going to see JETS bounce from this box and go on a 5th wave higher. Okay, the wave 5 target right now is 34. So in the next 6 to 8 weeks, I expect that JETS, the airline ETF, will go from this 23, 25 range all the way to 34. The invalidation and the stop level is going to be this wave 1 high, which is also the 50% retracement of wave 3 of 22. Okay, let's look at some components of JETS right now. This is JetBlue. It's fitting in almost perfectly with what we just said on JETS, where JetBlue has a wave 1, an ABC correction puts in a wave 2 low. Wave 3 goes to the 161.8% extension of wave 1, and now it is getting a reaction in this 38.2 to 23.6% retracement box for wave 4. So JetBlue is another one that has a very clear invalidation level. The wave 1 high of 15.67 is also very close to the 50% retracement of wave 3. So we don't want to see 15.7 broken. If JetBlue is above 15.7, I expect it's going to react impulsively from this box and go on a 5th wave higher. Okay, the target is that in the next 6 to 8 weeks, JetBlue with JETS is going to go on a 5th wave higher. Okay, that's going to take JetBlue to 26.67. So, very, clear and defined, risk and reward right now for JetBlue. If it's above 15.7, this wave 1 high is above the 50% retracement of wave 3, which is also 15.7, then I'm expecting a 5th wave higher. We take the length of wave 1, place it at the wave 4 low. I expect JetBlue to go to 26.67 in the next 6 to 8 weeks with JETS. Okay, I think the more outperformer in this sector are going to be American Airlines and Boeing. I'll explain why. I expect American Airlines and Boeing are going to play catch up to United Airlines, Delta Airlines, Southwest Airlines, Spirit Airlines, some of these other airlines that have outperformed American Airlines and Boeing. I think American Airlines and Boeing in this next travel and leisure run are going to be the outperformers, and here's why. We just talked about with JetBlue and JETS how they've already reached the 161.8% extension of wave 1, right? JETS reaches the 161.8% extension of wave 1. If you look at American Airlines and Boeing, they have not yet accomplished that feat. So they look like they are still within wave 3 right now. Right now, I think a stop for American Airlines is going to be 18.63. The invalidation level is going to be this low of 15. So between 15 and 18.63, I really want to see American Airlines hold above those levels. I love to see the wave B high hold for a wave 3 higher. I think American Airlines is going to go on this wave 3 run and potentially outperform Jets and JetBlue so long as 18 to 15 holds as the low. Okay, the wave 3 target is the 161.8% extension of wave 1. We almost have a cheat sheet right now because we can see JetBlue has already reached that feat. And the airline ETF, JETS, has also already accomplished the feat of reaching the 161.8% extension of wave 1. So American Airlines looks like it's ready to play catch-up right now in the airline sector and outperform. Okay, so if 15 to 18.6, 18.7 holds as the low, I'm expecting American Airlines will go on a wave 3 run from 21 to 31. Okay, so American Airlines potentially, going to be an outperformer in this market. It really lines up with a thrust we're seeing for JetBlue and a thrust we're seeing for JETS. Okay, let's talk about another airline. This is very similar right now to what I'm seeing in American Airlines, where Boeing has not yet reached the 161.8% extension of wave 1. So Boeing has a very clear 5 waves impulse. Boeing has a very clear nest right now. So what I'm seeing for Boeing is very pretty. We have a wave 1 and a wave 2. Then we have another wave 1 and another wave 2, and Boeing breaks above both of these wave 1 highs. So what this shows me right now is Boeing is in a confirmed nest, and what we'd say in Elliott wave theory is Boeing is incomplete to the upside. Okay, this is why we focus and trade the impulse of waves in wave theory, because we have minimum targets. Okay, so I'm thinking right now Boeing is incomplete. If we take the length of wave 1 and place it at the wave 2 low, Boeing is incomplete until it reaches 296. Okay, the wave 3 textbook target is 307. Okay, that's going to print. Okay, Boeing very liquid in the options market. Obviously, I'm not giving financial advice, but that's going to be a big payday right there if you go from 238 to 307, right? So we take wave 1, wave 2, wave 1, wave 2. If we take the length of wave 1, place it at the wave 2 low, Boeing's incomplete until it reaches 296. The textbook wave 3 target will take Boeing all the way to 307. Boeing also has a beautiful pitchfork. I think what we're going to see is 307 in the next 6 to 8 weeks is going to prove to be conservative. Boeing's actually going to overshoot that and go to the median of this pitchfork. So we take the the beginning of wave 1, connect the pitchfork with the high of wave 1 and the low of wave 2. Gorgeous reactions on the median, gorgeous reactions on the lower bound. Boeing's going to overshoot, most likely, this 161.8% extension target of 307 and go to the median of this pitchfork. Okay, right now, I think the most clear low is this low of 213. We really want to see that hold, but to be honest, the invalidation level is all the way down to 191, the wave 2 low. Okay, I think that's a little steep. We'll use this low of 213 as the stop for now. I don't think Boeing's going to break it below it because we see it looks like the airlines, Jets, and JetBlue are really in this wave 4 box and going to take another wave higher. And I expect American Airlines and Boeing are going to outperform and play catch-up. So if Boeing's above 213, I'm expecting 297 to 307 in the next 6 to 8 weeks for this wave 3. Okay, speaking of the industrial side of this market, I want to touch on crude oil in a little bit. I don't really see a clear setup right now in crude oil, but this is just something to keep an eye on, and it might be evidence right now that the top isn't quite yet in. Obviously, right now, I'm using QQQ as my primary gauge for the market. Very clear right now, wave 1, wave 2, wave 3 at the 161.8% extension. It's going to react from this wave 4 box, hold above 324, and head to 354. Okay, that's my primary gauge for the market right now and timing this melt up. And then I'm expecting that QQQ will need to correct this cycle sometime between mid-May, and late June. Okay, so that's kind of my time horizon for the next big buy the dip moment. But I will, hold your hand through the last stages of this melt up. Okay, I'm not going anywhere. If we look at crude oil right now, very clear wave 1, ABC correction, wave 2 low, and then we go well past the 161.8% extension to put in a wave 3 high. So crude oil, wave 4 may already be in. All right, it's very important to understand. Wave 4 might be in. I have a inkling of a feeling that QQQ is that crude oil, I should say, is going to get back into this wave 4 box and then get ready for a 5th wave higher. So this is from 423, to 424. So that's about 4 months. I think in the next 3 to 4 months, it actually will likely be a lot faster than that. In my opinion, crude oil is going to hold above 55 and it's going to bounce from this box impulsively. So later this week, if we see crude oil get in this box, I will post a setup on XLE, the energy sector. I'm waiting for it to get back in this box, but wave 4 could already be in yet. Okay, this is exactly why we don't short wave 4 correction. The impulsive waves can extend, and the corrective waves can be cut off early. Okay, that's why we have minimum targets for the impulsive waves, and we don't trade the corrective waves. We prepare for them. Okay, I think crude oil CL_F is going to bounce from this box impulsively. If crude oil is above 55, the wave 5 target is 72. Okay, so that's another sign. I think right now with JetBlue, American Airlines, and Boeing, and the JETS ETF, that the industrial side of this market isn't quite done. Okay, so always be diversified. The last thing you want to do is have the market go up and you were in the wrong sector. Okay, I know a lot of people in the first quarter just completely ignored all my setups on the oil stocks and all my setups on the airline stocks and all my setups on the cruise lines, right? Don't play favorites in this market. The only reason you should ever play favorites for a stock is because of liquidity. Okay. So speaking of other sectors in this market, I think the most likely question I'm going to get is what on earth is going to kind of cause quote unquote cause this sell off in the market that I'm expecting between mid-May and late June. Okay, I have a funny feeling it's going to be very similar to what happened last year, right? So if you close your eyes and ask yourself what stocks did really well last year because of some of the geopolitical situations that we had, right? Well, Walmart, Procter Gamble, and the stay-at-home stocks, some of the big box retailers did very well because of the fundamental events that occurred. And I think right now, this kind of correction that we're looking for between mid-May and late June is going to be a large rotation into the stay-at-home stocks. And one stock that did really well because of the fundamental conditions last year, allegedly, right? I don't trade fundamentals, but this is kind of the stay-at-home sector has become a sector. And we're seeing right now across the stay-at-home sector that a bunch of corrective wave 2s might be in, okay? And these stay-at-home stocks are not done, okay? And I think the solar stocks, the clean energy stocks, are going to do what they did in October of last year. They're going to ignore the rest of the market selling off and do very well. Okay, so this is Walmart right now. I think Walmart has a pretty clean count where it goes on a wave 1 and a wave 2 from this March low. Then it has a wave 3. And I took the extension of wave 3. It would go to the 161.8% extension of wave 1. And then it puts in a shallow wave 4 correction. And this is a textbook wave 4 because it perfectly retests the high of wave 1. Then we go on a 5th wave higher. Okay, so from that 5th wave higher, I believe Walmart, we'll look at Procter Gamble as well, it's the exact same count, has completed an ABC correction. I think Walmart is ready to go on a big run in the coming months. And honestly, I could see Walmart, Procter Gamble, Nike, and some of the clean energy stocks ignoring the sell-off that I'm expecting between mid-May and late June and just becoming the outperformers, right? What I'm expecting is a big rotation out of the airlines, out of the oil stocks and back into the stay-at-home sector and back into some of these big box retailers that did very well from the fundamental conditions that we saw last year. So we had a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5 to put in a large degree wave 1 for Walmart. We have an ABC correction. Okay, and this correction is exactly in the 50% to 61.8% retracement of the wave 1 run. So I think right now Walmart has put in a wave 2 corrective low from this impulse that it went on in 2020. It's ready to go on a big wave 3 higher with Procter & Gamble. Okay, right now we look at Walmart, this was from 3/13/2020 to 11/25/2020. Okay, that's about 7 to 8 months, but I don't think it's going to take 7 to 8 months because this is the wave 3, and wave 3 is more powerful than wave 1. I think in the next 5 months, in the next 6 months, we're going to see Walmart go the length of wave 1, place of the wave 2 low, and Walmart is going to reach 378. And that's a minimum target because that's just wave 3, and that is the shallow wave 3, right? Because wave 3 is actually bigger than wave 1. This would be just taking the length of wave 1, placing it at the wave 2 low. I think Walmart's going to reach 180, towards the end of the summer, perhaps early fall. And it's going to go from this 50% to 61.8% retracement, which is the textbook kind of wave 2 area for an impulse to end. And it's going to go the length of wave 1, place of the wave 2 low. So right now, I'm expecting in the next 5 to 6 months, if 126 to 121 holds as the low, Walmart's going to impulse to 178. Okay, and that's going to be a very conservative target if this plays out, because that would be the shallow wave 3 target, and then we'd expect a wave 4 correction before a 5th wave higher. Okay, so I think Walmart is going to be one that will go from being a laggard to a leader in the coming rotation in the market. So Walmart's above 121 to 126. I think it's going to go the length of wave 1, place at the wave 2 low. It's going to reach 178. Okay, in that same category, we have Procter & Gamble. Very similar story, almost identical wave counts. So for Procter & Gamble, it's almost the exact same chart, right? If you were doing a Rorschach test, I couldn't tell the difference, right? If you covered up this right here, this looks almost identical to Procter & Gamble. I think Procter & Gamble and Walmart are both about to resume the lead in this market. Okay, wave 1, wave 2, wave 3, wave 4, wave 5, large degree wave 1. A, B, C correction, large degree wave 2, and I think Procter & Gamble has put in a wave 2 low at 122. If you take the length of wave 1 in time and price and place it at the wave 2 low, these counts are almost identical, Walmart and Procter & Gamble. That Procter & Gamble will go to 174. So if Procter & Gamble holds above this low of 121, I'm expecting it's going to impulse higher all the way to 174. So that lines up exactly with what I'm seeing in Walmart. And I think in the next 5 to 6 months, we're going to see this huge 40-point rally in Procter & Gamble, so long as 126 holds the low. And if you're looking at this from a wave 3 perspective, remember, the 174 is the conservative target because that's just the length of wave 1, placed at the wave 2 low, and then Procter & Gamble is going to go at minimum to 174 towards the end of the summer, have a shallow wave 4 consolidation period before a 5th wave higher. Okay, and that lines up. These are twin sisters right now, right? These are twin counts that Walmart and Procter & Gamble put in this textbook wave 2 low and are going to go the length of wave 1, placed at the wave 2 low. Nearly identical. I couldn't tell these apart. Okay, let's talk about another consumer stock. If you recall last year in fall when the market was selling off, Nike, this was October, right? October wasn't really even a very good month for the stock market last year. Nike dramatically outperformed, and then it's kind of sold off while the rest of SPY has ripped. I think that same phenomenon is about to happen with Nike, where it goes on this textbook wave 1 and wave 2 correction, and then we have a wave 3 that's put in past the 161.8% extension of wave 1, and then it completes an A, B, C correction to put in a wave 4 low. So I think Nike right now, we're going to want to see 125 holds the low. Okay, it flirted with that recently. It didn't break it. I think these algos are really going to respect that this is an ABC correction to put in a wave 4 low. I think Nike is another one that is going to kind of ignore potentially the coming sell-off, and it's all going to be a rotation into the consumer, stocks, and we'll talk about in a second the solar energy stocks. So Nike, wave 1, wave 2, wave 3, ABC correction puts in a wave 4 low. Nike's going to go to the length of wave 1, place of the wave 4 low, and we're going to see Nike reach 169. The time target is that's from 316 to 608. So in the next 3 to 4 months, Nike could potentially outperform the rest of the market like it did in October and seemingly ignore a sell-off and with Walmart, with Procter Gamble, become the new leaders in this market. Okay, so if Nike holds above 125, I have a lot of confidence this wave 4 is in. We're going to go on a 5th wave run for Nike to 169. Okay, let's talk about some other stocks that I think are going to outperform in this market. Okay, if we look at FSLR, we talked about this count a lot. How this is the wave 1, this is the wave 2, this is the wave 1, this is the wave 2 on the largest degree for FSLR. But I think if we look at FSLR on the smaller degree, we take that into consideration, we're going to see some evidence right now that the solar energy stocks and the clean energy stocks are going to, like Walmart, like Procter & Gamble, like Nike, resume the lead in the market. I think that's very good news for Tesla. We can look at Tesla in a second too. But FSLR completes this ABC correction, goes on a wave 1 and a wave 2, and then it doesn't break below this wave 2 low, and it does break above this high. I think FSLR is in an impulse right now from this low. It's going to head to 94, have a shallow correction, and then it's going to go all the way to 103. And then the next rotation in the market is going to be a blast off point for FSLR for it to explode to the 140, 160 level towards the end of this year. Okay, but FSLR, wave 1, wave 2, wave 3, wave 4, wave 5, large degree wave 1, looking to get in this correction. I have FSLR leaps. I'll disclose I'm long FSLR. I'm not selling FSLR, even though I acknowledged it in mid-May to late June. We could see some blood in the market because I expect First Solar, I expect the solar energy stocks in general. I expect Walmart, Procter & Gamble, and Nike as well, that they're going to be getting rotated into, and they're going to dramatically outperform in the coming months. Okay, let's talk about another solar energy stock. This is Polar Power, POLA. Love this one a lot. Okay, so Polar Power, wave 1, wave 2, wave 3, wave 4, wave 5, large degree wave 1. It completes an A, B, C correction to put in a large degree wave 2 at this low of 7.97. From there, it has another wave 1, an ABC correction, puts in another wave 2. I love to see Polar Power did not break below the 3.5 low of 7.97. I think what we're about to see, the clean energy stocks are going to dramatically outperform this summer. Okay, I think Polar Power and FSLR are clear evidence of that. Are we going to wave 1, a wave 2, a wave 3, a wave 4, and a wave 5? Put in a large degree wave 1. An A, B, C correction puts in a large degree wave 2. We don't break below this low of 7.97. So that's the invalidation level. That's also going to be the stop level. If those hold, I think we take the length of this move, we place it at the wave 2 low. This move was from 9.4 to 125, and if we took the full move, it'd be from 624 to 125. So I think in the next 5 to 7 months, we're going to see, if we see this 7.97 low hold, Polar Power with the rest of the solar energy stocks is going to go on a huge run to 37 in the next 5 to 7 months, so long as 7.97 holds as the low. That lines up very similarly with what we're seeing with FSLR. Okay, so there you have it. I've given you guys my full count for everything. Okay, I'm gonna hold your hand through the final phases of this melt up, but don't pick up quarters in front of a bus. Okay, make sure you have stop levels, and I personally have some cash ready to buy a dip if we see some blood in mid-May to late June. Okay, let's look at Tesla real quick. I think Tesla is another one that we can see start to really benefit from the clean energy rotation. Okay, it's kind of lagged recently. I think that's almost a good thing for Tesla, that it is going to be an outperformer later in the coming months. Okay, Tesla is going to act more like a clean energy stock than it will a big tech stock, and that's a very good thing. So Tesla completes an ABC correction, goes on a wave 1 and a wave 2, and right now, if we see 667 hold as the low, Tesla's going to go on a wave 3, have a shallow wave 4, and then have a wave 5 higher. Okay, once it does that, it will break above this 125 high of 900, and then Tesla's going to confirm this ABC correction is complete. What I'm thinking right now for QQQ is that when we correct this cycle after 354 is reached, that Tesla is not going to break below this low. It's going to finish a wave one, finish a wave two, and then Tesla is going to blast off this summer with the clean energy stocks. So I think right now, if we completed a wave one, we would see Tesla have a wave two correction, and then Tesla is going to be another big outperformer and start to extend higher into a wave three. Okay, so we should definitely see Tesla in the thousands this summer with the clean energy stocks. Right now, I want to see 667 holds the low, and Tesla to continue to confirm it's within a 5 waves impulse from this low. The next stop is 828. Once it breaks that level, that's the 161.8% extension of wave one, and then that's going to confirm Tesla's in an impulse, and it's going to increase the likelihood that it's not ever going to break below this low. It's going to have a shallow, not necessarily a shallow, but it's going to have a wave two correction before it explodes with the solar stocks this summer.